to personal financial hacks. And this is actually one of my most favorite classes to teach because it is incredibly applicable to daily life and protecting your credit and your finances. So I'm really looking forward to this. And I do enjoy teaching it again because it is can be super helpful for folks. So I'm going to go ahead and share my screen here and get started on the PowerPoint. So to begin on this first, and I might make this a little bit bigger. Actually, I think this is pretty good since I'm here. I want to have the PowerPoint up for sure and make sure that you can see everything. So to start out in this session, again, transforming and empowering your personal finances. Um, Presence and listening is really all we need from you. And I've got course notes when we're finished up that you can take a look at. And if you reach out to me at matthew@jasonsheart.org, I'm happy to send you kind of my cheat sheet note at the end because there are some links and stuff we're going to explore and show you this firsthand. So I'll kind of be looking at two different screens and actually walking you through some of the steps, these things that you can do. So let's get started here with the first slide, which I want to just cover a couple key concepts and terms. If we're going to start by focusing on credit scoring and what matters most in a credit score, controlling your personal data and who has access to it, taking a look at owning, and managing your bank accounts and the different types of accounts, different types of financial institutions, I should say, and then talking a little bit about approaching lending and borrowing of money and the different types of financial vehicles that are out there for you to use when you're borrowing money. I would hope when you're finished here that you'd understand and know how to protect that personal credit. Again, manage your data, take ownership of your banking, and then making sure you're a smart consumer when it comes to lending and borrowing programs. So that's what I'm going to teach you how to do. So credit scores, what are these things? Well, generally, there's always been three credit repositories or credit reporting agencies. You've always had Experian, Equifax, TransUnion. I know that has expanded into possibly one additional one, but really it doesn't necessarily matter because they're all using similar scoring models. Each model is a little different in what you want to understand. There are different weights placed on different things. So if you're going to get a mortgage for a home, that lender's going to look and place weight, or they're going to pull a credit score that uses a model that places a little different weight on your scores in different areas. Where if you go get, let's say, a card at a big box store, they're going to look at more revolving credit lines and look at a credit model that's based on how you've repaid and treated revolving credit, home equity loans, probably some car loans, credit cards, where a mortgage lender is looking more at late payments, looking at the propensity for you to be able to repay that loan, and looking at more, I guess you could call it installment or amortized loans where there's regular monthly payments. So there's all kinds of different models out there, and really it just matters on what kind of weight that that credit model is going to put in those different areas. But the areas in general, and I guess I'll back up for you. I'm assuming you can read this, of course. So it's credit score is just a numerical expression. It's an analysis of someone's credit information and gives a lender or a bank or an institution an idea of your credit worthiness as a person and your ability to repay that loan. So the five main areas, and I've got a great visual representation coming up, and I just want to discuss it really quick, really in order of weight. So your payment history, that's a big one. 35% of your score is how you've paid over time. Have you had late payments? Have you not met the minimum due? Things like that. And amounts owed. So again, this is sort of like what I always call credit utilization. So if you have $10,000 in credit available to you, but you've used 9,500 of it, that's a really high number, and that looks kind of negative in a way to a lender because it looks like you've maxed out all the credit available to you versus having 10,000 in credit and only owing, let's say, 2,000 or 2,500. Credit length. How long have your accounts been open? And this is a big one because people will oftentimes make the mistake of closing out, like, if they have 3 or 4 credit cards, they'll close them all out and open one new one. Or maybe out of those 4, 3 of them they've had for 10 or 12 years each, and one of them's only in the last year. And the mistake that gets made is that you will go and close those 3 accounts that are old and then keep the one open that's only a year old. So your credit depth went from this down to this. So the average age of your account is now 1 year because you closed all the ones that were 10 to 12 years old. So if you do consolidate your cards and maybe keep 1 or 2, it's a good idea to look at and keep one of those cards that is the oldest, because it keeps that credit depth intact for your credit. And then different types of credit. Do you have revolving credit cards? Do you have car loans? Do you have student loans? Do you have mortgages? So that they look at the mix of types of credit that you have. And then inquiries. And this is always an interesting one too, but some of the laws over the last 10 or 15 years with what's called FCRA, so FCRA, Fair Credit Reporting Act, a lot of this controls, when you go to get it, let's say you go buy a car, that car dealership, lender, the finance person there, they can run your credit and then they can send that out to 4 or 5 different banks to kind of shop it around. But excuse me, the one thing you got to remember is, and this is nice, it didn't used to be this way, but those 4 or 5 checks on your credit will actually end up just being one inquiry instead of 10 inquiries or 5 inquiries or all the places they shop it around. So it's kind of nice that has changed, where all of those just count as one inquiry. Now that's really a good thing, honestly, in my opinion. So yeah, remember to be present of those inquiries. It is still a good idea to take a look at them, no doubt. But be aware of these credit areas and how those impact. And I want to do a visual representation for you of what this actually looks like. So again, here's that history, and really these are the 2 big dogs. They're the big areas that are going to impact your score. And again, it's 2 of the easiest areas, really, in my opinion, to sort of manage. If you take care of that payment history, make sure you just pay things on time and pay the minimum, and keep those accounts open, those older accounts. And then, keep the balance of what's available to you, in check. I always tell people never exceed about 70%. So if you have $1,000 available to you, don't borrow more than 700. So try to keep that ratio of what you had borrowed to what you have available at 60, 70%. That optimizes your credit score. So I personally just kind of like the visual representation. It just gives you a good understanding of those scores and those areas that matter. So let's take a look at some resources that are available to you. There's all kinds of services out there for free credit reports and this and that. And honestly, you sort of get caught into the clickbait, ClickFunnels sort of thing, where you go in there and, hey, I'll give you this if you give us that. So really what's happening is your information is going to get sold. If they tell you it's free, generally you're not getting your scores. They're just going to show you what's on your credit report, which isn't honestly all that helpful. But just remember, I personally would not recommend paying for credit report services, because it's not, you can get a look at it, and there's a better way to use the federal government website to check your credit for free rather than paying for some freecreditreport.com service, because what they're showing you may be an entirely different scoring model than the bank is going to use that you might go borrow money from. And that bank, they don't know where that credit report you have came from. So they're going to pull their own credit anyway. So it's not really going to matter. But this is a great resource. So let me pull this up for you. Give me 1 second here. I'm going to go back. So I want to show you this free credit report really quick. I've got it pulled up. And this is annualcreditreport.com. So this was a website that the federal government is required. The 3 credit repositories, Experian, Equifax, TransUnion, they're required to have this site up and running and available to you as a consumer to take a look at your credit report. So you can go right in here, click Request Report, and pull it up. It also gives you the 3 different credit repositories, the 3 main ones. So if you ever want to dispute something on your credit report, all of their information is on here. You can actually create free accounts with each one of those credit repositories, as they're known. So you can go on there and block your social security number so that creditors cannot pull it without you knowing it. And there are ways that happens, and we will get into that here in a few slides. But just remember, use this site. You by law have access to your credit report for free once a year, which is right here every 12 months. So that is a federal law. So use this and don't pay for this sort of service because it is available to all consumers. And again, your lender, bank, whoever you're going to work with to borrow money, they're going to pull their own credit report anyway. So use this free service just to monitor your credit. So let's jump back 1 here. And again, remember, it's required to give you access to it. And the nice thing is that service is meant to kind of protect consumers' information, medical information, all of that. It cannot be provided to anyone who does not have a purpose specified in the FICRA Fair Credit Reporting Act. So someone, and there's a lot of gray area there, but again, just don't pay for it. Use the free service. Let the bank or lender you're working with take care of what credit score they're going to use. So, and I'm not going to maximize my presentation here because I've got some other links I want to take you out to. And actually, you know what? Hold on here. I will go ahead and turn it into slideshow fast for you. So moving on from the annual credit report website, as far as your personal data goes, there are a couple really good resources. One of the big ones, and this is amazing. To me, it's sort of like the do not call registry, but it is called Opt-out Pre-Screen. All right, so all of that mail that you get in your mailbox, the pre-approved offers of credit, the pre-approved offers of insurance, I don't need to tell you how much mail you get. And those are the pieces where it's insurance or a bank account or all of these, pre-approved for $10,000 credit card, whatever it is. Those are called pre-approved offers of credit. You can actually control that data by using, and so let me say one more thing with regard to your credit. So organizations out there, companies, they can go to those credit repositories and pay money and tell them, hey, I would like a group of individuals aged 30 to 50 in these zip codes that make this much money. And then the credit repositories will send a list of leads to those companies that pay for it. Now, they generally don't get your credit scores. They just get a look at your credit profile. But they do not need your permission to obtain that. Your data gets sold without your express permission to do so. But you can stop your name from appearing on those lists. And that is where the opt-out pre-screen is. And before I show you those, I just want to quickly talk about these other links here. So Whois is another great resource, especially if you are doing research and searching for things on the internet. Whois is a great way to go in and type in, you can go type in jasonsheart.org, our website. And that Whois data is going to show you who actually owns that website. And I'll show you the page here in a second as well. But one more link I want to talk about before I show is the Spokeo. This is just an example of sites out there that compile personal data about people. And, Spokeo, I'm sure, has some valid uses, but I personally don't want my personal information on there. And there are ways. Most of these sites work in a very similar manner. So with just a little investigation, and I'm going to show you in a second, you can go in there and have your data excluded and pulled from those I don't know what you want to call them. If you want to call them data mining companies or whatever. They're basically consolidating consumer data and then trying to sell it to anyone who's willing to pay money for it. So let me show you a couple of links here. I'm going to go back. And again, we saw the annual credit report. So that's a good one. And again, remember at the end, I've got all these links lined out in a reference for you. So the first one, opt-out pre-screen. This is what the site looks like. This is the official consumer credit reporting industry website. So this site is, again, required to be up, just like the annual credit report one. This site is required by the federal government to exist and give you the opportunity to remove your information from the database that gets sold to companies that want to pay and send you pre-approved offers of credit. It's pretty straightforward. You go down to the bottom, click here to opt in or out. I'll click it really quick. You fill in a little bit of your information and you can opt out electronically for 5 years and set yourself a reminder on your calendar to come back in 3 or 4 years and redo this again. But it's just like the do not call registry. You can go register your number on there. That's a conversation for another time, but as to how effective or the efficacy of actually putting your stuff on the do not call list and actually not getting calls. But I have found this has drastically reduced the number of telemarketing calls that I get. So it's pretty cool. So remember this one. This is also on the cheat sheet links that I will send to anyone who requests them. The other one we talked about is Whois, and this is a great place to take a look at domain names. When you're doing business with a company or taking information, data, whatever from a company, this is a great resource to go and look up who actually owns that. You might actually be surprised, if someone tells you, that they have a website that you're utilizing for understanding how to grow strawberries organically. But when you actually go look up the domain for that company, it could be owned by someone who is not aligned with organics. They're really using it to collect data or for some other purpose. So if you really want to make sure that who you do business with aligns with you personally and your beliefs, this is a great resource to see who owns the websites and the companies that you do business with. It's another fantastic resource, of course. And the last one, the Spokeo that we discussed. Sometimes these websites get a little tricky as far as knowing how to navigate it. But basically, if you go to Spokeo, and there are other sites just like this. So if I type my information in for an example, let's search for me. It's going to basically pull up everyone with my name, 1,081 people. So you can scroll through here and take a look at your information. Look for your specific name, I should say. And I've done this, and I mean, it's actually a little frightening. I mean, they had our daughter's information in here. They had personal income information. So I'm not really okay. I don't want random folks having access to my personal data. And I know it's becoming difficult in this day and age to really put the clamp down on who has your personal data. But every time you see a site like this, it's best to just go remove your information. So it's pretty simple. Once you search for yourself, you just scroll to the bottom. And most of these websites I've found operate in a very similar fashion. So this sort of process I'm showing you to get your information excluded, it's going to be fairly consistent across sites. So once you search for yourself, you can actually go into your information and then remove it. You can also generally go to the bottom of these pages and go to privacy, and it's going to bring up essentially the portal for you to remove your data. So when you scroll down, like on this particular one, removing your listing from Spokeo right there. So you just basically click on here, do the opt-out form. I think it sends you an email that you have to confirm, and then you can actually get your information removed. So again, this process, I'm showing you this because this is a good one, website that compiles data. But again, understanding how to go into the privacy area and remove your listing, remove your personal data, it's key. But you look for like an opt-out tab or privacy tab. They like to bury it in there and make it difficult to find. So just wanted to show you those links really quick. I'm going to jump back to the PowerPoint here fast. And again, here's those links. If you want to take a screenshot, please do. But I've got that cheat sheet I'll provide. So let's move on a little bit. This is probably one of the best things that I talk about is what I call, the area of owning and managing your bank accounts. And I've always sort of referred to this as a dummy account. So I spent close to 23-ish years in banking. And, there's a lot of great stats out there. But right now, currently, about 1 in 15 people become victims of identity fraud each year. Americans are most likely to have their identity stolen. Scary. Didn't know that. I looked some of these stats up recently. And if you look at the next one, 650,000, just over that, people suffered from identity theft in 2019. And 1 million children become victims of identity crimes each year. So there are a lot of services out there with LifeLock and others, and you can insure, or I should say protect your kids' credit. I've actually had people over the years come into me in banking, and we've pulled up their kids' credit, and kids 13, 12 years old, and they've got cards with JCPenney. Someone has gotten a hold of their information and opened cards. And identity thieves love to do that because you're less likely to look at your kids' credit because they're really not using it when they're 5, 10 years old. So it's a perfect target for identity thieves to go after your kids. So it is equally important that you check your kids' credit and your own and make sure you're doing a good job of that. And I always tell people, do it once a year. You got that free annual credit report. You can go look at the accounts that are there and handle it. And then you can reach out to the repositories if they're a problem and investigate and get it removed. So what is a dummy account, online account? So how I do it personally is we have our main checking and savings. And then we have a separate online account. Okay. And I say right here, it's sort of partnered with our main checking account. So that online account and our main account, with the main accounts, those don't see the light of day. And I am diligent. My wife will tell you I am diligent about this. Those cards never go to the store. I do not use them online. It is strictly our checking and our savings. I use the checking to do bill pay and have payroll for us put in. But anything that gets done online, if I go on a trip, if we go to the store, if we're shopping, if we're using iTunes or Hulu or paying for online inscriptions, Netflix, any of these things, the only account that sees the light of day is the online account. Now, there's a few reasons that this is super handy. Again, I talk right there about using online transactions, using that online account for online transactions, anything you do. And in my opinion, it nearly eliminates your main account, that main checking and savings I talked about. It hasn't seen the light of day. The only way anyone's ever going to get that on the open market is if they hack the bank. Does it happen? Sure. But this is a great way to protect your information and do a few other things. So what I do is I will just simply transfer money when we need it right over to that online account. I personally use, and there are other services out there that do a good job of this too, but the one that I've really found in the last 5 years that works really well is Capital One. Their 360 checking is great. It's fantastic because you can pull the app up really quick on your phone and you can lock your card. If you have a credit card, you can lock it. If you have your online checking, you can lock it and unlock it. This example is I pull up to the gas pump, shut my vehicle off, pull up my phone, unlock my card, jump out, gas up the vehicle, grab my receipt, jump back in. When I'm leaving, I open my card back up and hit lock. It literally takes 10 seconds. So you can control and block transactions coming in and out at your leisure. One of the things that I found super helpful with this in this day and age, with the emergence of the subscription-based model. I'm sorry, I'm going to take a quick drink here. Bear with me a second. With the emergence of that, the whole online, or excuse me, subscription-based model. Oftentimes, you can go get a free trial. Like, let's say I want to try on, let's just say Sling TV, and I get a free trial, right? Generally, that free trial, and a lot of them I have seen, they're subject to you still giving them a card number, because the idea is you will forget about the free trial, and as soon as it's up, you get charged for the first month. You can set calendar reminders and do everything to try to remind yourself to go in and actually stop that before that renewal happens. But using this online account model, the idea is your card is generally always locked. You just go in and unlock it when you're about to make a purchase. That also stops those auto renewals I was just talking about, because you will get a text or email from, if you use, in my example, Capital One, you'll get an email or text saying that Apple tried to, or Sling TV tried to run a charge on your account. Oh, that's right. Gosh darn it. I have that subscription. I need to cancel that. So you can go back out there to Sling in this example and just cancel that subscription. And you're good. You didn't even have to unlock your card. So it helps you kind of control when stuff gets ran and doesn't. And in my opinion, that is the biggest advantage, because you get notified when someone's trying to run it. It's a good reminder if you do have those free trials and stuff. You won't just auto billed for them. You can control that process and decide when money comes out of your account and when it doesn't. So, and again, it gives you full control over renewals, timing of transactions. Maybe you get an email that, for like, one thing that happens for us is we have Hulu for our live TV, and, I'll forget, of course, once in a while when that's coming out again. And I get a pop-up that Hulu tried to charge us. Oh, that's right, our renewal's coming up. Well, it's Friday. I get paid Monday, let's just say. And so I just wait a couple days. I go in on Monday, I unlock my online account, jump on Hulu and hit bill again, and poof, it's done. So it helps you kind of control that timing of when you, excuse me, when you want to pay certain bills. Obviously, don't be late. But these tools have been really great in the last 5 years with sort of that, emergence of subscription-based services. So this is one of my favorite parts. It's so helpful. It helps protect your credit, it helps protect your account and your money. It lets you take control over subscriptions and online spending. It's just such a great idea. I'm not even sure how many hundreds, if not thousands, of clients I helped do this in banking over the years, but it is one of those things that I tell everyone, you need to do this. Absolutely do it. And it costs you nothing to open a little separate side online account with your bank, and then you can just move money back and forth as you need it. All right, so let's jump ahead here. Let's talk a little bit about smart lending and borrowing. So debt service is a term you might hear. It's probably more of an internal banking term. Most people call it interest or fees, APR, annual percentage rate. But it's really, debt service is the cost to you to use someone else's money to buy something or do something with. And so when you're considering who you should align yourself with as far as doing business, the 2 to 3 basic types of institutions that exist out there. One is going to be, let me go back. Sorry, federal and state banking institutions. So there's state chartered banks, federally chartered banks. There are publicly traded institutions. So if you think about credit unions, that's one of the other ones. But if you think about the difference between, it's the same, really the same in investments. So in the investment world, you can do business with a fiduciary who has a responsibility financially to you and not the profits of their company. Same thing with banking. If you decide to work with, let's just say, Chase or Wells Fargo, well, those are publicly traded companies. So for me, the difficulty is I'm putting my money in a bank whose objective is to make money for either the company or a shareholder. But I'm the depositor. That's my money. So you can do business with a credit union or even a state chartered bank. And that I generally stick, except for our online account, our main accounts are with a credit union. And the reason is because when a credit union has a meeting and they make decisions, they're making decisions for the depositors, you and I. Whereas other financial institutions, they have different alignment. So they may make decisions that are better for their shareholder than your depository dollars. So I always encourage people to look at companies they do business with and understand that mutual company model. It's like the difference between, let's say, if you use like Edward Jones for investing, they're going to have shareholders versus using someone like Mass Mutual, Northwestern Mutual, those mutual companies. Same thing for Nebraskans. It's like Emeritus and a Surety. These companies are mutual companies. So when the company makes a decision, it's doing so based on the policyholders, who holds insurance policies with them, not necessarily what's best for a shareholder. So think about that alignment, because it is very important to understand. Okay, let's jump ahead here. And again, on that smart lending and borrowing piece, the quintessential question is, the federal and state bank charters, different rules. State banks are often more flexible than shareholder or federally chartered institutions, because they may have a loan committee that actually sits down and looks at a borrower reasonably and says, yeah, their family's been doing business with us for 40 years. We can make that loan. Versus one that's publicly traded, the decisions inside the institution may be made in different alignment with a shareholder versus the relationship they have with you as a client. And again, the credit union is going to be more aligned with that mutual company mentality. It's the same reason if I look at life insurance and investment vehicles, I'm looking at a company that has my best interest in mind at heart. So that's, to me, what I'm looking at. So I talked a little bit about that down below, looking at a mutual company and a fiduciary, do they have a responsibility to you as the policyholder or depositor, or a shareholder? So it is important. And when borrowing money, a few useful tips that I would encourage everyone to commit to memory. Car loans and lines of credit to mortgages, all of these things, the fees and points you get charged are negotiable. Do not let a lender tell you it is not, because it is. The interest rates are negotiable, the fees. You should absolutely shop around. And if you remember earlier, we talked about the Fair Credit Reporting Act, where you're not going to get dinged for having multiple lenders look at your information and make you an offer for the interest rate and the fees. Shop around. Absolutely do it. If anyone tells you or discourages you, you should get out of there and go somewhere else. So again, bad idea if they tell you it's going to negatively affect your score. And even when you do have your credit looked at by multiple lenders, those inquiries, they fall off after 30 to 45 days. So it's a temporary adjustment to your score, possibly, to have a lot of inquiries. It's not going to affect you in any significant way long term. So yeah, don't ever believe that. So, and again, you go and buy a car loan or a mortgage or any of those things, even car loans, I'm often shocked that people don't know, when you go to the finance office to finance that car, they are going to try to sell you points. They can, up your rate from 2.5 to 2.7 and make 20 basis points in commission without you knowing it. They don't have to tell you. So you need to shop around and ask those questions to prevent yourself from being taken advantage of, or at least understand what it is you're paying. So they'll upsell you on those rates to do what's called holding points. So they try to hold as many points as they can to make commissions. Not good for you. So you should definitely understand how that works and why credit is so vitally important. And knowing that all of these things are negotiable. And sometimes with credit unions, one thing I always let people know as well is since a lot of times they're loaning their own money rather than borrowing it from the feds, let's just say, car loans there are much different. If you've ever had a car loan with a big bank or lender, oftentimes you make extra payments. What happens is your payment goes down. If it's 500 and you make an extra 100, the next one goes to 4, and then 3, and then 2. And eventually they show you, hey, you don't have a payment due, right? Because of course they want you to stop paying till your payment returns to normal and you make every scheduled payment on time, paying all the interest. Credit unions are different. They don't necessarily load the interest on your loan that way. What they do is if you actually pay extra, they take that extra amount, apply it to the principal of your loan, and thus immediately reduce the interest due on the next payment. So you can make a big difference in paying down your auto loans by using a credit union, just because of the way that they calculate that interest. It's not a full amortized interest every month. You can actually pay it down and immediately impact the principal balance of the loan, which ultimately affects how much interest you pay over the life of the loan. So credit unions are a very good resource when you're looking at car loans in particular and consumer type of lending. So I just want to kind of debrief really quick and just sort of synthesize some of the things we talked about. Why does credit matter? And where do you find yours? Remember, go to that annual credit report website, utilize that free service. And remember that credit, you understanding how old your accounts are. Have you kept the utilization of the credit available to you to 60, 70%? Why would it benefit me to manage my personal information? Well, it's less likely to be on the dark web or in the hands of a hacker. It's good for you to understand if someone has gotten a hold of your kids' credit information and what's going on there, and to really understand if there's ever been anything reported inaccurately on your credit and getting that removed. So it is important to monitor it once a year and use that free service so you understand what is on there. And how can you better control your banking and transactions? Well, you can use the online account model we talked about. So you have control of when money's coming in and out of your account. Understanding the types of financial institutions and why choosing one over the other for your own personal alignment makes a difference. And then, name one advantage to using a credit union and why shopping around for a lender is important. Well, a couple reasons that we discussed. One, credit unions calculate and amortize interest on car loans and things a little different than a traditional bank. But all of that interest and fees are negotiable. So just remember, anyone that tells you that it is not, you should check around. Now, if you've had some struggles on your credit, oftentimes those things become less negotiable, because if your history and scores aren't great, it's okay, but it is more risk to a lender. So they are more than likely going to have a different, a little bit different fee structure. There's going to be a little extra interest and fees that they will charge you in order to take that risk, what they deem as a risk. Again, goes back to number 2. Why does it matter to monitor your credit? Well, for this reason exactly, because the higher we can keep that number, I think the highest the credit scores even go is 830. So knowing that is super important, especially as you look at the overall over time. If your scores are 620 versus 720 and the amount of fees and interest over 10, 20, 30 years compounds greatly. So it's super important to manage that and understand it and know what's going on. So, you can hit me up in the chat and I will answer questions. I kind of leave this last few minutes available to sort of line out questions and some of the things we talked about. I've also got I talked about a great resource page, but really quick, my email is right here, matthew@jasonsheart.org. Again, if you reach out to me after the class concludes, I will send you the cheat sheet with all of these links that you can go to and start practicing all these things. So take a look at that. Send me an email and I will get it over to you to take a look at. The other thing, I'm always tickled when people reach out to me. I've spent a lot of time in that banking, lending, real estate, finance world. So I've gained a lot of knowledge over the years, but one of the things I love more than anything is to impart that knowledge to folks and help them understand these things that we're talking about and why it can be beneficial for them. So, I know I talk a lot about stuff, but just remember, I'm always willing to help answer questions. Again, I'll send you the cheat sheet, but reach out to me, even a phone call. You're welcome to call me and I will talk to you about what I know, maybe get you in touch with some people at some of the institutions around Nebraska that you might be looking at using. I am always more than happy to impart knowledge and help people in our community be better consumers of financial products, whether it be insurance or lending or banking. Um, so yeah, please use me as a resource. I'm always tickled to help people in our community be better consumers of those things. So here's my reference page that I'll throw up really quick. Um, Understanding those credit categories is super important. Again, just one more review here really quick. Uh, Again, use that annual credit report service. It is provided by the government. It's mandatory. It's federal law. It's there for you to utilize. Um, Use opt-out pre-screen to keep your financial information protected and not going out to folks requesting it unbeknownst to you. So make sure you protect that information. And where is your information coming from? Who has access to it? Using that Spokeo site and like understanding when you do business with people, who actually owns this company? Is it legitimate? Is it not? Trying to keep yourself away from the scams and the phishing emails and all the spam that comes into your email. Yeah, use that who is. Use when you see sites gathering data like Spokeo, get your information pulled out of there. And obviously I lined out that process to do that. It's not the same on every site, but just remember, most times it's a very similar process that you're going to go through. And again, start looking at that online account system. I promise you, if you take anything away from this class, it will be utilizing that system in your financial life with your spouse or significant other, whatever it is. Get one of those accounts set up. One thing I will mention too is we actually do our credit card and our online account with the same company, with Capital One. The reason I do that, well, I mean, one, I think Capital One's pretty good as far as um, the rewards and things you get for using their card. But also they give you that same ability with your credit card to lock your card, just like the online account that I discussed. So it's very user friendly and gives you control of those personal finances. So I am a fan of using the Capital One accounts. There are obviously other ones that are just as good and do very, very similar things. So just look around. What makes you comfortable? Where do you sense that good alignment? Is it a mutual company? Is it a credit union? It is important. That relationship's important. Um, but if you do anything, use that online account. I promise you will not regret it. And it's so darn easy to use. So, and again, remember, all fees and interest rates are negotiable. And yes, you should shop around and choose the type of lender, that is right for you. Again, looking for that alignment. Um, One of the things else I will say as well, and I've talked about maybe writing some additional courses on lending specifically. When you get into borrowing money, we were very blessed in Nebraska to have the NIFA, the Nebraska Investment Finance Authority. A lot of states have them. Iowa does. Kansas does. There are some amazing grant programs out there for down payment assistance. They're just incredible resources if you're buying a home. And if you ever have questions about that, I can certainly sort of steer you to some of the organizations that I'm familiar with. But yeah, look for those grant funds and look at those interest rates, look at the types of programs. It all does make sense. And I've discussed lining out a more advanced version of this course that focuses more on whether it's home equity loans and mortgages, and how adjustable rates on those different types of loans work. And then also looking at mortgages. The complication with mortgages is, I mean, the amount of documents that you have to go through and understand when you're applying for a mortgage and going through purchasing a home. That process, it can be very overwhelming, and there are specific questions you need to ask with your lender, and understanding the type of loan you're getting. There are loans that have recourse on investments and non-recourse loans. There are varying types of programs, but I would always encourage everyone to look around for grants and programs that like NIFA offers. And there's some other great energy loans for home improvements that some of the local banks do here through the state of Nebraska. There's just an incredible amount of resources out there. And I just want to, I really encourage people to reach out to me and let me help get you connected to those resources. It will save you thousands and thousands of dollars. These are all things that we're talking about that are incredibly powerful for your personal, financial future. There are things that are going to cost you more money over your lifetime than anything else. So it's just a really good idea to be doing those things. So let me jump on here really quick. And, again, I want to be able to send this reference page out to folks. And I'm going to go ahead and turn off the PowerPoint, but reach out to me. Let me get you those resources. And again, if you're familiar with our website, if you go to, it's right down here in the corner, go to jasonsheart.org. All of our free classes are listed there. Information about our apprenticeship program and the 5 minutes for change. So take a look at our website. And if you want to find us on social media, generally you're going to just plug in Jason's Heart 402 and you're going to get connected with us on LinkedIn, on Facebook, Twitter, TikTok, any of those interfaces. We will absolutely be on there. And again, I am always tickled and happy to help folks in our community understand these concepts and be really good, financial consumers. It's incredibly important. And again, I know I've said this several times, but it will be something that saves or costs you probably the most money and out of anything you will do over the course of your life. These types of concepts are invaluable, and they will save you more money over your lifetime than anything. So again, Matt Fuller, I'm the COO of Jason's Heart. Reach out to me. I'm happy to help. I will leave kind of the open here for a few minutes. If anyone wants to chat, just use the chat feature, hit me up, ask me questions. Again, email me at Matthew at Jason's Heart and ask me questions. I'm always more than happy to help our community, help people be the best consumer of financial products. So that kind of concludes our financial hacks. I hope you found it impactful and beneficial. And, we do these classes every month. Tune back in, reach out to me, let's communicate, and let's be one of the people helping people and raise the tide for our community. Thanks everyone for tuning in, and I'll see you next time. Have an awesome first week of spring.